With markets shifting unpredictably, are your investment strategies ready for a makeover?
We've got insights from Emily Brown, David Lin, and Ronald-Peter Stoeferle, experts in their fields.
Thanks to AI, we've distilled their hours of analysis into bite-sized takeaways just for you.
So, let's dive straight in with our first segment on the inflation trend and stock valuations from Emily Brown.
Welcome to today's review of the insights shared by Emily Brown on equity markets, as discussed with host Joseph Wang.
Emily sheds light on the current inflationary pressures and the overarching volatility affecting investor strategies.
According to Emily Brown, current inflation trends are heavily impacting stock valuations.
Joseph Wang highlights that this volatility poses potential downturns, making it crucial for investors to reassess their strategies.
How does Emily Brown describe the impact of rising inflation?
Emily argues that rising inflation is eroding purchasing power, thus pressuring stock valuations.
What strategies does Emily advocate for investors in this climate?
Emily emphasizes the importance of caution in equity investments and highlights diversification as a key strategy to manage risks.
What does Emily predict for the equity markets this year?
Emily predicts that equity markets might correct by 15 to 20%, with ongoing high volatility expected.
In conclusion, what does Emily suggest investors do to adapt?
Emily recommends reassessing portfolios to mitigate risk and focusing on sectors less impacted by inflation.
Today, we're breaking down the Trade Brigade's insights on current market dynamics and how investors can avoid falling for traps in a challenging Nasdaq landscape.
The host underscores the importance of strategic trading to navigate potential market challenges, especially given the recent fluctuations.
The Trade Brigade host points out that the Nasdaq is currently facing significant resistance levels that could influence future movements.
He emphasizes that maintaining a cautious approach is crucial for traders as the market exhibits signs of volatility.
What does the Trade Brigade host say about the critical resistance levels in the Nasdaq?
The host states that the Nasdaq is positioned at essential resistance areas, and failing to breach these may lead to a considerable sell-off.
How does the host suggest investors should approach trading in the current context?
He emphasizes the need for strategic trading rather than reactive decisions, especially in volatile conditions.
What insights does the Trade Brigade host provide regarding market sentiment?
According to him, there's a notable bearish sentiment that necessitates caution among traders.
What does the host predict for the Nasdaq in the near future?
The host predicts heightened volatility as the market responds to its struggle to exceed notable resistance levels.
To conclude, what recommendations does the Trade Brigade host offer for investors?
The host concludes that investors should stay alert, avoiding impulsive actions in favor of well-reasoned strategies to effectively manage the current market landscape.
Today, we're exploring David Lin's analysis on the trajectory of gold and silver.
He emphasizes the importance of understanding market trends.
David Lin notes potential growth in gold prices driven by economic factors.
He suggests that the demand for silver might increase due to its industrial applications.
Central banks are expected to continue adding to their gold reserves.
This accumulation likely supports an upward price trend.
What investment approaches does David Lin advise for silver and mining sectors?
He suggests that investors consider adding silver and mining stocks to their portfolios.
What does David Lin say about market volatility affecting gold and silver?
He warns that volatility and broader economic issues could introduce risks for investors.
What price projections does David Lin offer for gold and silver?
He anticipates notable upward trends in both metals' prices in the near future.
David Lin concludes that keeping a close watch on central bank strategies is crucial for forecasting gold prices.
He stresses the need for careful analysis of silver market trends to maximize investment potential.
Today, we're examining how recent job data impacts market trends.
The hosts emphasize that shifts in job statistics can lead to major fluctuations in market dynamics.
The hosts highlight the correlation between job data releases and stock market reactions.
When job reports are weak, it often leads to market sell-offs.
Investors tend to modify their strategies in light of employment data.
Negative job figures can create anxiety on trading floors.
The hosts state that job data can indicate future economic conditions.
Recognizing the implications of job data can guide investors toward better strategies.
The predictions indicate ongoing volatility in the markets.
The hosts recommend that investors prepare for potential corrections in response to evolving economic conditions.
To conclude, the hosts suggest investors stay flexible and adjust their portfolios based on the latest job data.
Continuous monitoring of economic indicators is key to informed investment decisions.
Today, we explore Ronald-Peter Stoeferle's perspective on the potential for gold's revaluation, moderated by David Lin.
Stoeferle's insights indicate that numerous inflation pressures could significantly increase gold prices.
Ronald-Peter Stoeferle asserts that rising inflation is a key contributor to potential increases in gold values.
Additionally, geopolitical instability often drives investors towards safer assets like gold. Stoeferle highlights that gold historically thrives during times of inflation.
Its role as a hedge against currency depreciation is vital in our current economy. What does Ronald-Peter Stoeferle foresee for gold prices ahead?
He projects that if inflation continues and demand for safe assets grows, gold could climb to $8,900.
What key insights should investors draw from Stoeferle's analysis?
Stoeferle suggests that investors should reinforce their gold reserves as a strategic response to current economic conditions.
To conclude, Ronald-Peter Stoeferle posits that gold's importance is heightened in light of economic volatility.
Investors should stay informed on inflation trends to adequately adapt their portfolios.
Today, we're diving into an analysis of the emerging commodities boom with Tavi Costa.
Tavi highlights that the current supply chain disruptions and geopolitical tensions are creating substantial opportunities in the commodities market.
Tavi Costa identifies two major drivers behind the commodities boom: supply chain vulnerabilities and increasing geopolitical tensions.
According to Tavi, these issues have intensified demand for commodities as investors seek stability.
How does Tavi Costa see supply chain issues impacting commodities?
Tavi notes that disruptions in supply chains are leading to shortages, which are pushing up prices for various commodities.
What role do geopolitical tensions play, according to Tavi?
Tavi explains that heightened geopolitical risks have made commodities more attractive as investors seek safer investment options.
What does Tavi Costa project for the commodities market?
Tavi forecasts ongoing growth in the commodities sector, but he warns of potential volatility depending on global developments.
Tavi Costa emphasizes the need for investors to focus on companies that are aligned with the commodities boom.
Furthermore, keeping an eye on geopolitical developments is crucial for making informed investment decisions.
Wow, what an eye-opening discussion we had today.
Indeed. Tavi Costa, Ronald-Peter Stoeferle, and our other experts shared some explosive insights.
I was particularly struck by the contrasting views on commodities. Tavi sees a boom ahead, but there's that caution from the trade brigade.
Right. It's a fine balance. While Tavi's optimism is infectious, the realities of current market conditions can't be ignored.
And speaking of gold, Stoeferle's prediction of it soaring to $8,900 was a real head-turner.
Absolutely. But not everyone shares that bullish outlook, adding an interesting tension to the conversation.
One thing everyone agreed on is the need to stay vigilant. Markets are unpredictable, and inflation is still a huge concern.
That's a great takeaway. If you found this discussion beneficial, give us a thumbs up.
And don't forget to subscribe so you can catch all our expert analyses and future insights.
Next up, we dive into the intricacies of global trade dynamics. Definitely stay tuned.
Thanks for joining us today. We hope to see you in our next video.